Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. And in this video, I will cover more scenarios than usual because the low might be in, and therefore it is important to assess the different possibilities and then end with the probabilities at the end of this video. Starting with the medium time frame bearish scenario where the high of wave 1 or A is in over here, and we're looking at a zigzag structure to the downside in an ABC. This then ends wave 2 or B before then a continuation to the upside. In this scenario, that means that the high of wave 1 or A is over here after an impulsive structure to the upside. And the problem here is this wave 4. Now, waves do not only have a price relationship, they also have a time relationship. And this wave 4 is 11 times longer than this wave 2, and it is about 4 times longer than this wave 3, which is incredibly unusual. For a wave 4, I already start to doubt that this is a wave 4 the moment it is crossing the 3/5 time of wave 2, but this one went all the way to the 11/5 time. So that is the reason why this scenario has a lower probability. If we go to the second scenario, which is also bearish as we still expect a move to the downside, we have the end of a wave 1 or A over here, and we are then looking for a 3-wave WXY structure to the downside, where this is only the beginning and then a wave A followed by a B and then a wave C in the final wave Y, so a WXY, where we are then looking for these fib targets over here around the 382 or the 0.5. And what is nice about these targets at least is that around the 382 we have a support area, as you can see, around 29k, and around the 0.5 Fibonacci, which is 28k, we also have additional support. These fibs are taken from the low over here to the high of this wave 1 or wave A. The problem in this particular scenario, again, is time, because in this scenario, what happens is that if this is the end of wave 1 or A, and you take a fib time from the low to the high of wave 1 or A and you click over here, then likely this whole structure is going to take about 4 to 5 times the length in time of wave 1 or wave A, which also, again, for a corrective structure of an impulse is very, very rare. So also, again, time here is the issue. If we then go to the more bullish scenario, in this scenario, we also have wave A or wave 1 over here, but then wave 2 or B is finished. The Fibonacci that gave support is the 0.236, also pulled from the low to the high of wave A or wave 1, which is a very rare Fibonacci target, only common, I should never say common for the 0.236, but it only is acting as support in a very bullish market structure. We also had a 0.236 bounce over here, and this might happen again. In this particular scenario, the low of wave 2 or B is already in after a 3-wave structure, where now we're going to be looking towards the upside. And in this particular scenario, the length of wave 2 or B is just around and about the 3/5 time of this wave A or 1, meaning that the corrective structure is about 3 times longer than the impulsive structure, which is fine for a potential wave 2 or a wave B. It is, gotta say, more common for a wave B than a wave 2 to have such a long sideways price action, because usually a wave 2 tends to be a bit shorter than the 1 fib time, has a minimum target of the 0.382 fib time, which is like about here, but the 3 fib time is still something to keep into account because of the rule of alternation in Elliott waves, where in Elliott waves, if wave 2 is very shallow and long in time, then eventually a potential wave 4 tends to be short and deep for then continuation. And usually, or most commonly, it is the other way around, with a wave 2 being short and deep, and then a wave 4 being longer and more sideways, more shallow. Now, in this particular scenario, if the low of wave 2 or B is in, we are going to be looking for a move towards the upside, where if we take a look at the targets for a wave C, I actually have to adjust my pivot over here as the target is then higher, as then the most common target area for wave C is between the 1 and the 1.236, taken from the low to the high of A to the potential low of wave B, which is between 36.2k and 37.8k. If we are looking for a wave 3 towards the upside, then we are going to be looking at this green pivot over here. And then the minimum target for this wave C is the 1.618, being at around 40k, which is a very, very important level. Now, if this is a wave C tends to be more lazy. It is an impulsive structure to the upside, but it tends to be a bit more lazy and takes a bit more time than a wave A. While a wave 3, you really want to see a parabolic structure towards the upside with a high amount of volume coming in. Definitely more volume than we had in the first structure, being a wave 1. If we then go to the lower time frames and we first check the bearish scenario, then we are looking at this range, right? This is what we're going to focus on at the moment, where now we're looking at potentially a W, X, and then a Y to the downside. So a 3-wave corrective structure. The problem here is that the target area, most common target area for a wave Y, being between the 1 and the 1.236, has already been hit, even though we did not really see a 3-wave structure to the downside. So what you want to see in a wave Y is a 3-wave move like this, but instead price dumped to the downside, hit the common target area for a wave Y, and if it now has to move to the upside, it has to move up quite far for then ending around the same area, because the 1.618 for a wave Y is a rare target. It's not a common target. It is a rare target for a wave Y. This is the common one over here. So therefore, this sharp move to the downside is not really what you want to see in the bearish scenario, where you actually want to see a 3-wave structure. Instead, this is a 5-wave move to the downside. In the more bullish scenario, we are looking at an expanding flat A, B, C, where wave C has to take the low of wave A, which it has done with the wick over here. After this wick, you then expect a continuation towards the upside in an impulsive structure. The invalidation being taking the low over here at 29.5k. The fibs that you see on the chart, the 1.236 and the 1.38, pulled from the high to the low of A to the high of wave B, are less common targets for a wave C, but nonetheless targets for a wave C in an expanding flat. Most common is the 1.618, which is just below, but this is fine. And the minimum requirement for a wave C is taking the low of wave A. Now the other scenario, which I actually don't have on the low time frame, but that is the medium time frame scenario, is this one over here, right? Where we are then looking for the high of wave 1 or A over here, and then a 3-wave structure to the downside in an ABC, where if we are looking for this structure, usually the minimum target for a wave B is the 382, which just now has actually been hit over here. As you can see, this is the minimum target for a wave B, and then potentially a 3-wave structure to the downside in a zigzag ABC, and then you want this wave B to also be a 3-wave structure, not a 5-wave structure, so you want to see a 3-wave move. Also, if we look at the resistance areas, over here we have a wide target area, which is sitting between 30.5k and 30.7k, which is important resistance. And just above, we have between 31.1k and 31.3k, another resistance area that could act as resistance for then potentially a move again back towards the downside to the support areas mentioned before. If we go to the micro scenario, and this is actually this is what inspired me to make this particular video in this setting, because on the micro scenario, we were looking at this move to be a W and then an A, B, C structure, a nice 3-wave move, very, very nice indeed, for then a wave X and potentially then another 3-wave structure to the upside for then a wave Y, where the most common target area for Y is between the blue fibs over here, the white little area, right? Now inside wave Y, we want to see a 3-wave structure. So if this is the low of wave X, we are then looking for an A, B, and then you want to see a wave C. So this wave C then has to be something like a 1, 2, 3, 4, 5, because again, price is already getting close to the target area of a wave Y, or it has to be a 1, 2, 3, 4, and then eventually a wave 5. The main issue here is that for a wave C, the most common target area is the 1 to the 1.236, pulled from the low to the high of A to the low of B. And as you can see, this one has been passed quite impulsively as well, with volume increasing to the upside. The 1.618 is a common target for a wave 3, but a rare target for a wave C. So the fact that price went to the 1.618 gives more probabilities to a more bullish scenario than a bearish scenario. If we go to the second WXY scenario, we then again have a wave W in a three-wave structure, ABC, but now in the wave X, I made a triangle over here. So this wave X, instead of the lower pivot, gets a higher pivot to the upside. Therefore, the target area for Y is moving up as well, which is now over here, sitting between 30.6K and 30.7K. You want to see again a three-wave structure. Now, so far, this move over here doesn't really look like a three-wave structure to the upside. So you want to see maybe a better three-wave structure to the upside, or it has to be a very, very sharp zigzag structure, and then a wave A, B, and then a wave C. And if we then pull a trend-based fib from the low to then the potential high over here of a first wave to the low, then you can see that price now entered the wave C target area, most common target area of wave C between the 1 and the 1.236, which is this section over here. It has been reached very nicely, but then it is below the most common target area for wave Y, which is something to note. Now, a minimum target for wave Y, however, is the 0.618, which has been passed already. So it is valid, but preferably you like to see a bigger, better three-wave structure, but of course, time will tell. In a more bullish scenario, we are looking at a potential 1-2-1-2 scenario. So 1-2 over here, another wave 1, another wave 2, before then continuation to the upside in a wave 3, where you want to see volume increasing as price is moving to the upside. Now, most commonly for a 1-2-1-2 scenario, you are seeing a diagonal, which is something like this, and then you have a 1-2, 1-2, and then another 1-2, creating some sort of a contracting diagonal. However, the charts are never perfect, and a 1-2-1-2 like this can also work. It is definitely something we have to consider with the volume increasing as well, and then a potential third wave to the upside, where you can see that the minimum target, the 1.618, has been hit, taken from the low of 1 to the high of 1 to the low of wave 2. But if the 1.618 can be passed, then usually the next target is the 2.618, but the 2.618 is a little bit in the middle of nowhere. And then we have the 3.618 all the way at about 31.2K. So yes, very often in an impulsive structure, the 1.618 does give a reaction, as it does right now. Once again, price might range here for a while. And what is going to be very important, everyone, is have a look at the CVD divergences while price is rejecting over here. Are you seeing bearish CVD divergences, or is price creating bullish CVD divergences, where then you can expect a continuation to the upside, a push towards the Y target area, if not the 2.618 or even the 3.618. If we look at those CVD divergences, then what you can see is the bullish CVD divergences have played out. The bearish one got invalidated. The bullish one, all of these have played out, as well as this one locally. So price was moving to the upside, and while price was moving to the upside, it also created local bullish CVD divergences, which you see over here. So this is the move to the upside. Quick refresh just to be sure, and you can see over here that price moving to the upside, but the yellow line moving to the downside. That's bullish CVD divergences. And now locally over here, we have to wait and see what price is going to do and what kind of divergences it is going to give, because on the 50-minute it is way too early to tell. So as it stands right now, after this longer video, what are the probabilities? Well, on the medium time frame, on the low time frame, as well as on the micro, we are looking for price to go a little bit higher. Observe the reaction at the Y target box. If that one gets passed, we observe the reaction at the blue target area. Keep an eye on the CVD divergences, because the low might be in for then a bigger move towards the upside, where this is then the beginning of again taking this high and going to into the higher 30s. But we have to take it step by step. We cannot be like, yo, we go to the moon, 100K next, right? We have to go level by level. The probabilities are all towards the bullish side at the moment for continuation, and we observe per level what is going to happen for potential continuation or rejection. But the bullish ones currently have higher probability. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.